Testing. We're ready. In 3, 2, 1. Let's try that again. 3, 2, 1. Here we go. You're watching Be the Boss of Your Money. This is my live stream all about personal finance, and we cover investing, the stock market, what's going on with the economy, and so much more. But it's all about making you the boss of your money. That's what we want here. We want you to be the boss of your money. We want you to take control of your money, because it's very easy for your money to take control of you. What's one of the easiest things to lose control of? Yeah, that's right. Money. So we want you to take control of your money by giving you the education, the tools that you need to make the best possible financial decisions for yourself. That's what this is all about. I love to teach, I love to educate, love to share knowledge, and I love to hear from you. So while you're watching this, if you would like, ask me any questions about today's content, today's topics, which is the 4 big markets today: stocks, bonds, housing. And I can't believe I'm going to include this with those other major markets, but we have to. We're talking crypto as well. I have the best reason to own crypto. I have a lot of really bad reasons to own crypto, and I go over those on like a daily basis. But I have a few good reasons to own crypto as well. But we're going to talk about the major markets. So hit me up with your questions. Your words of wisdom, words of encouragement are always appreciated here on my live stream. Be the boss of your money. And while you're watching this, if you would give it a thumbs up, let me know where you're coming in from. Maybe a little heart, some kind of reaction. It helps me with the algorithm, gets my show out to more people. I really appreciate it. As a thank you in advance, I'm going to share with you this nice picture of this cute little bunny rabbit. Thank you very much. Getting back to the show. What we're going to do now, I already see some comments and questions coming in. We're going to roll the quick intro, and then we're going to get into the content. And this is going to be a good show. Here we go. All right. I hope everything sounds good today. It's, you know what happens when you bounce around from Zoom calls? My controls, my audio controls are over here. That's why I keep looking over there. When you bounce around from Zoom to live streaming to GoToMeeting, sometimes you have to change the audio and visual settings. It's a little bit of a pain in the neck, to tell you the truth. That's why I shouldn't say I avoid Zoom calls. You can't avoid them, but I really have to make sure I check the settings before I hit the go live button. A few of you are out there. Asher, thank you so much for joining me. Mark is out there. Ken, are you moving to Pennsylvania? Is that what I'm seeing from you? Are you actually getting out of Orlando? I'm just curious, good for you, man. I think you'll like it up here. Mark is out there. Mark Angarola. Got a few people out there already. Mark, hey, buddy. What's up, man? So nice to see you. And Asher is out there. Housing is a bubble and going to pop bad in 2022. It may very well do that. And I could think of a few scenarios in which that could happen. Of course, I want to say that all of my guests, thank you so much. All of their comments are their own opinions and do not necessarily reflect that of mine, Client for Strategy, Next Financial Group, and blah, blah, blah. I'm sorry, guys. I know the disclaimers. I'm a financial advisor, so I have to get those disclaimers in there. It's like such a big thing in our life. I'm so glad you're out there, especially Mark. Mark, man, good to see you. I have to maybe I'll see you in the gym tonight. I will be there later today. Okay. Mark and I are gym rats, fellow middle-aged gym rats in the gym, not lifting like we were before COVID. I'll tell you that. We've got to get back there. Today, we're talking about the 4 big markets. We're talking about stocks, bonds, housing, and crypto. These are huge markets. So I'm not going to get into each one of these markets individually, because we'll be here for like 20 hours. But I think the angle that I want to go here is I want to I want to talk about how these are bouncing off of each other. I want to talk to you about how these four large markets, again, stocks, bonds, housing, and crypto, and how one could be affecting the other, and some really weird signals that I feel we're getting that I've been talking about, and that's in the bond market. Okay. And it all comes down to the strength, the pillars of the economy. It's always the strength of the economy. So it's inflation and it's interest rates. And that's basically what the entire assets are. That's what assets are all about, really. It's inflation, interest rates, present future value, net present value, discount modeling, discount method. So it's all about how interest rates and inflation work together. And we've got a couple of markets that are really, it seems like every market is really strong because I guess they are strong. So first we're going to do is we're going to show you some quick news. I want to do a quick share screen, pop myself up in the corner as usual. The first thing here is you see this Tesla out with a incredible earnings report. The headline profitability, and Tesla reports more than $1 billion in net income. By the way, that's net income. That's not just, from what I understand, income from selling credits, clean air credits, what have you, to other auto companies. But we'll see. Tesla has a massive market cap. It's down from $900 a share. It was up about $25 between today's regular session and the aftermarket trading. Does it get back to $900 anytime soon? We'll see. But that's just like the big headline of the aftermarket trading. We've got this week coming up from Alphabet, which is Google, Facebook, Microsoft. We've got so many earnings coming out for the rest of the week. It's going to be making a lot of people's head spin. Okay, I don't want to get into this one yet. Let's take a quick look at the markets. I'll just make the screen a little bigger so you can see it on your smartphone. So the Dow, new record, NASDAQ, S&P. Listen, I keep saying this is the record that investors love to hate on because there are just things that are unusual about this rally. Not a lot of stocks are participating in the rally. It's being driven by huge mega cap stocks, which was the case for most of last year and most of this year. The other times was the, back to work stocks, economic reopening stocks. But NASDAQ was barely up. Oil kind of flattening out at 72. It was down to 68, 69. So it's kind of balancing out after United Arab Emirates reached a deal with OPEC to raise production, but it's stabilized. 10-year treasury, it was 1.18, 1.19% a week ago. And that was the mixed signal where if you expect high inflation and a strong economy, the 10-year yield, that's this number, I'll highlight it in blue, that should be, like 1.75 to 2%. A few months ago, we had an inflation scare, and that number went up to 1.79%. It's not even close to that. So that's the biggest mixed signal in the world that I could find anywhere. Why aren't our treasuries telling you that inflation is transitory, like what the Federal Reserve says? A lot of people were brave in saying inflation's transitory, but once you get the inflation, which we all expected, you take a deep breath and you ask yourself, what if I'm wrong? I always ask myself, what if I'm wrong? I also always ask myself, what if I'm right? And then I do my best to more or less prepare for both scenarios. And you take your time horizon, the longer time you have to invest, the more you could focus on what if I'm right, and the less you could focus on what if I'm wrong. And when you have less time to invest, your short time, your time horizon shorter, you really want to focus more on what if, what could go wrong as opposed to what could go right. Being right is more a matter of time healing all wounds as opposed to running out of time. So time is your friend. Let's take a look. What else? So the VIX is below 20, 17.58. That was in the 20s last Monday when the market tanked 700 points in a day. You saw that come back, and then we've already exceeded the day. We've already exceeded the Friday before last Monday, and we're hitting new highs, as you can see. All right. So what else is out here? 10-year Treasury, again, 1.29%. So those are some of the things I wanted to show you. Let's take a look at crypto. Now, crypto has been going up a lot. I just had my friend Filippo on last week. We talked all about crypto, mining, values, use cases. We spoke a lot about it. You could go to, if you scroll through my Facebook page, my business page, or my YouTube channel, I'll show you those in a moment. You'll see those, but you'll see our conversation. But we spoke in depth about Bitcoin. I made a couple of little clips out of it. I posted 2 of them so far. I'll post another one tomorrow. I'll show you those in a second where you can find them. But Bitcoin up over 10% today. That's a pretty big day for Bitcoin. Even though Bitcoin, as volatile as Bitcoin is, up 10% in a day is pretty good. And, you know, Ethereum was up. XRP is up. Dogecoin, I don't even know why I bring that up. That's up. But what's really driving it today? I want to show you this. This is the big news. I'm not going to play this little video here, but Bitcoin prices surge. You see that? On belief Amazon may make a crypto move. Here's what experts say, but I just want to go through this with you. Can you see this on your screen? My screen is acting a little quicker than yours. Hopefully that'll come down a little bit and you'll see exactly what I'm looking at. But I'm going to read this real quick. Bitcoin surge above 39,000. When I had my friend Filippo on last week, it was like 30,000. It's a big move. Bitcoin surge above 39,000 for the first time since mid-June. That's about a month and a half ago. As sentiment turned bullish following a recent sell-off, it comes after news that Amazon's payments team is looking to hire a digital currency blockchain expert, according to recent job posting. The posting signals that Amazon may be taking a more serious look at crypto, such as Bitcoin, and it comes after recent bullish comments from Twitter CEO Jack Dorsey, Tesla CEO Elon Musk, also Kathy Wood from ARK Funds. In the same conversation with Dorsey and Musk, they spoke about it at a recent conference online, all about crypto and their bullishness. But if Amazon, the biggest retailer in the world, is interested in crypto, then I think at that point the doubters, the haters, I'm still not a full believer, but I think at that point it's hard to deny that crypto is here and it's real. Okay, it's real. It's here. I don't think that's like a overly bullish forecast at all. Just saying, if Amazon takes it, it sends a signal that it's here, and it's real. But if the biggest online retailer, the biggest retailer, decides that Bitcoin is worth their time or other crypto, whether if you agree with crypto or not, I think a validation from Amazon is about as good as you could possibly get. Now, this is speculative. I mean, this is a job posting that people are acting on. Maybe Amazon decides to give up. They don't hire the right person, or maybe they hire the right person, and in 6 months they say, forget it. We're not into this. It's too hard. You never know. But at this point, if Amazon wants to get involved, and they did put up a job posting, that is true, legit news, that they're looking for that Amazon's payments team is looking to hire a digital currency and blockchain expert. That would probably be a pretty cool job to get. I'd imagine so whoever gets that job is probably a freaking genius. A freaking genius. Okay, so let's get out of that. We'll forget that. I'm going to put the screen back on. We took a look at interest rates. I want to show you something else. Pop myself up on the screen. Okay, you see this here, the 3-month is down a little bit. The shortest term treasuries are off a little bit, and the longer term treasuries are up a little bit. It means the yield curve slightly steepened, and that's a pretty good indication that maybe the growth scare that was around for the last month and a half is starting to go away. companies are so far reporting blowout earnings, and as high as earnings expectations were, companies are still beating them. It does get to a point where Wall Street estimates for earnings are so high that companies just can't exceed them. But definitely hasn't happened based on, it hasn't happened yet based on Q2 earnings reports, which are just coming out now. I know we're in the third quarter, but Q2 earnings numbers are just coming out now. Okay, let's take a look at lumber. Lumber has lost about 2/3 value in just the last 2 months. So we talked about lumber, the price of houses, and that brings me to another big headline. This is a pretty big headline. Housing boom is over as new home sales fall to pandemic low. Houses are up about 6.6% in price over the last year, but the annualized growth in houses has gone from like 99% to 900,000 plus units to the 600,000 units. And that's just about where we were during, at the bottom of the pandemic. And that was just because of shortages of labor, of land, of materials, or is the housing market really getting weak and everybody who was in a rush to buy a house, the real truly motivated people who wanted to buy a house, pay above asking price, buy $1 million house that should have been 600,000 just a few years ago, is that cohort over and done with? And now we're getting back to a more, a slower, normalized market. That's what this report indicates today. Okay, sales of new single-family homes fell to an annualized rate of 676,000, below May's 724,000 rate, below the 19.4% June number, but it's down even more from from earlier this year of over 900,000 units. So that's a big headline. I'm going to put all this together for you. It's not just to give you a quick, update and that. Okay, we talked about the bond market. We talked about interest rates. We showed you lumber. By the way, this is me over here on LinkedIn. If we're not connected on LinkedIn, you'll definitely want to head over there. I post on LinkedIn probably 2 or 3 times a day. It's useful stuff. I happen to love LinkedIn. It's a great place to interact. It's my number one place where we could truly have some back and forth. All right. Here's my Instagram handle. On LinkedIn and Instagram, I post all of my short clips. I take these little 1 to 2 minute snippets from live streams like this, and I post them all on Instagram and LinkedIn and on my business Facebook page. That's me, your handsome mug up here. And I post all my video snippets over here as well. This is the show, by the way, that's happening right now. It says this video is live now. I'm not going to play it for you. What happens if I play it for you? What's happening right now? It says this video is live now. I'm not going to play it for you. All right. So yeah, there you go. It's like a little bit of a delay. So maybe you just got a glimpse into the future, but here I am. Instagram at InstaMitchG, LinkedIn, Mitchell Goldberg, and Facebook is Client First Strategy. And if we're friends on my personal Facebook page, that's great, but I don't post nearly as much content on my personal Facebook page as I do on LinkedIn and Instagram and my business Facebook page. All right, enough of that. So let's put it all together, and then I'm going to let you go. We've been on for about 19 minutes. Josh, thank you so much. A few people, Asher. Yeah, a couple of people out there. I appreciate you guys watching. I really do. Bill, I want to give you a call. God bless. I heard the sad news, and it's awful, and I'm thinking of you, buddy. I saw the emails go around, and Josh is out there. Happy things for Josh. Good to see you. Mark, maybe we'll be maybe I'll be at the gym too. Okay. We'll see. I do want to get there today. I say that every day. I have a gym bag that's like a permanent fixture in the backseat of my car with my sneakers and shorts and shirt in there. Okay. So let's put it all together. The crypto market is getting so big. Okay. And hey, Phil, good to see you. Thank you so much for joining us, Phil. I really appreciate it. I like, I don't know if you noticed, but I get kind of excited when I see you guys out there, and I see your names and I put them on the screen. I get like so excited. John is out there, John Martucci. Thank you so much, John. Thank you, brother. I get so excited just because I feel like I feel like a little bit of a community. I feel like a little bit of a community feel here, and I love that. Like we're all friends, we're hanging out. It's community, and it's just to me, it just it tickles my dopamine receptors in my brain. What can I say? I get excited. Thank you all. It means a lot to me. So crypto. If you take a look at the amount of people who own stocks, you could talk about stocks in a 401k and an IRA. You could talk about people in stocks as exchange traded funds, mutual funds, or individual stocks. It's a lot of people. And if you compare that amount of people to the amount of people who own crypto, I don't have a hard and fast number on this, but my best educated guess is that if just a small portion of the population who owns stocks bought crypto, just on that alone, crypto could go up a lot more. And if it's being used more and now it's being accepted on Amazon, to me, that's like, holy smokes. Can you imagine? I mean, that to me is pretty bullish on crypto. I just want to make sure I'm saying this the right way. It's not a call I'm making. I'm saying it's the numbers. A lot of demand for something, the price goes up. Does that make sense? I think that makes sense. I'm talking to you, by the way, Rita, because I know when you're listening to this, you're going to be like, wow, Mitch is like really straining himself to say this in a proper, compliant way without making it like I'm recommending it, Okay, so there you go. John, I'll give you a shout, man. You want to hit me up with your phone number? Send me a DM and I'll give you a call. I have to leave my office in about 10 minutes. I'll call you from the car, okay? So you put together crypto, it's definitely on the speculative side. But you put that together with a rising stock market and a pretty strong bond market, it's a sign to me that there's so much liquidity in the market, so much money being pumped into the system, the financial system because of the Fed and stimulus from Congress, that money is just finding places to go that investors feel offers them more upside potential. I was talking with Asher, who's watching the show about a couple weeks ago, 2 or 3 weeks ago, we're talking, and I said to him, if I say to somebody now, like if I go say to someone who's, let's say, 30 years old and said, hey, I think the stock market could probably return, maybe 9% annually over the long term. And I asked him, would anybody even want that today? And he said, no, people in my age cohort, they're like, they expect much higher returns. So it's just this twisted sense of expectations that is the scariest thing. Our unique set of circumstances is money printing by the Fed. When every time we hear about the Fed pulling back, raising rates, cutting back on bond buying, it sends investors into a nosedive. It sends the stock market into a nosedive, and people start to freak out. That's why it's so tough to get out of this stuff. I do think that the Fed should bite the bullet, start to get out of this stuff. It's enough. I think the economy is strong enough to handle the Fed pulling back on things, on its stimulus, and stock market be damned. We're ready for it. Stock market has to learn how to work on its own. All right, that's a whole other story. And same thing with the economy. But if you put it together, stocks, bonds, crypto, and housing, these are all a function of interest rates, easy money, and low inflation. If inflation goes up and that hurts the dollar, I think that could be bullish for all of these other assets, except for the bonds. Bonds would be hurt the most by inflation. Typically, if you have a fixed rate, let's say 1.2% from a 10-year treasury, and interest rates go up, it makes your interest rate payments from the bond worth less in the future. Okay, because you could have been earning more. That means your bonds will have to adjust lower, and new bonds coming out will be paying whatever the new higher rate would be. So that's the risk. And if you put this together with housing is the real market. That's the market that is like, it's real life. And it's the biggest real life market. Stocks are, of course, real life, but stocks don't necessarily reflect the economy. They don't really reflect what's happening in the ordinary American's life. Stocks are really, the stock market is a function of how well the largest companies are doing. Good economy or bad economy, like when the economy got hurt, got crushed when we had the pandemic-induced economic shutdown in 2020, people were like, why did the stock market recover so fast and go on to new records if the economy was so bad? Because the stock market does not reflect the economy. It reflects the performance of individual stocks. Remember, it's not a stock market. It's a market of stocks. And in the market of stocks, the biggest heavyweights, Amazon, Apple, Google, NVIDIA, Netflix, okay, Facebook, the companies we talk about all the time, they're the biggest. So because they're bigger, they have a bigger impact on the stock market. And when they go up, they pull the whole market with them. And they were ideally suited for a economic shutdown, work from home, stay at home. All right. So I think all of these markets are related. And the message that they're showing us right now is that inflation is expected to moderate. And as long as the interest rates more or less stay low, it keeps the housing market going. And as long as the housing market keeps going, it helps the stock market. And as long as the stock market keeps going, I think there's a spillover effect into crypto. So if you see any one of these four markets, stocks, bonds, housing, or crypto, have a hiccup, you have to immediately look at how it affects the other three markets and what it could mean. And I'm taking my signals from these markets. It doesn't mean I'm doing something crazy with client accounts and selling everything or buying everything. That's not the point. The point is to have the confidence to stick with your investment plan. So the more you know, the more you understand it, the easier it is for you to stick with your investment plan. We all are told it's for the long term when you invest and everything will go up over time. But people still panic. They still hear idiots on TV say, you've got to get out now. You've got to get all in here or get all out of all of that. And I'm sorry, that's not a way to manage an individual investor's portfolio. When you hear somebody say, I'm getting out of everything I have and going to cash, when you hear someone on TV say that, that's their profession. That's their professional investment. Okay, that has nothing to do with an individual investor, has nothing to do with you specifically. So that's why it's important to learn. Okay, that's about it for today. It was more of a catch-up day. Thank you so much for watching. I really appreciate you. I'll be back tomorrow, and have a very good rest of your day.